We are biased for Africa. We believe that we need to innovate for Africa.
Hi everyone, I'm Sabine van der Linden. I run Venture Labs under the name of Alchemy Crew.
My name is Tunji Andrews, founder and CEO at Awaba.
You need to have products that are simple enough that someone that's never bought insurance before can understand them in a 2-minute phone call.
2014, Nigeria's first InsurTech platform was formed, Moto Juniors.
I believe there's a huge opportunity to reshape the narrative of insurance.
This is Arun Iyer, founder and CEO of Alpha Direct.
Dr. Neto, founder and CEO of Willa Health.
My name is Benton. I'm the founder and CEO of MTech.
This is Glo, the CTO at Pineapple.
This is Herman from Austria, Managing Director of Assurance.
So join us for the new season of InsurTech Business Series Podcast. Fresh conversations on InsurTech in Africa. Subscribe now.
Okay, so thank you for welcoming me. My name is Bente. I'm one of the lucky directors. I'm also the CEO of MTech. We are an InsurTech based in Nairobi, registered in Mauritius, mainly active in the East African market. I'm very happy to be part of this event today, and which is all about redefining the InsurTech ecosystem in Africa and bring some East African context to it. Unfortunately, a company in Lagos, being everybody who is insurance, who is actually actively in insurance most, is renewal season. And also as an InsurTech, we cannot run away from it. So I'm always saying the month December, January, February are high intense. This is the same as, like we were saying in Germany, a baker can't take off on Christmas because everybody eats and cake and bread. So this is our season, and we're actually having a little bit of a travel block. But I'm so happy to dial in and listen to the conversations about embedded insurances. I just told a presentation about this a little bit earlier in Amsterdam, so I can just support everything that has been there, and that it is all about market penetration, making it easy and accessible, which is one of the major insurance penetration barriers at the moment. So I've been asked today to talk a little bit about the ecosystem per se, the position of the InsurTechs in the African context, and also how we are seeing the future of InsurTechs and also are integrating with the partners. So I'm going to take you to roughly 15 minutes. I hope it's not going to be a monologue, so please keep asking questions or note the questions, and I'm happy to answer them later. I'm taking you a little bit on our journey, why we are doing what we are doing, and what we are hoping to get out of it, not just for ourselves, but for the continent per se. So a little bit about MTech, who doesn't know us. I think we are Africa's first full-stack InsurTech. There might be somebody now shouting up in that room, but this is what I've been told the other day for some people. So our technology is basically comprising around 3 different areas of it. That is, we're having a comprehensive retail marketplace, which is basically dealing with the B2C market. So this is a mobile and a web version, which is based in Kenya. The clients can compare insurance offerings and purchase it, payment, do digital payments, and also manage, meaning claim insurance offerings of 38 Kenyan underwriters of a total of 42, and across all product classes, meaning motor, medical, PA, travel, and also life insurance products. When we started, this was actually our core business, but we very quickly came to realize that it is not enough to just digitalize one aspect of the ecosystem, because your tech can be amazing. Like our problem was, we started with the marketplace, but then we realized that we are not an insurer, so we need to get the products from somewhere. We have to digitalize the insurers. And this is when you're looking to the far right-hand side. These are the efficient software as a service digitalizations. And these are the efficient software as a service digitalizations which we are doing today, our B2B market. And this is important for 2 things. Basically, if you want to create convenience for the client, your partners have to be digital as well. And the other thing is, and we're going to get to that a little bit later, Africa has a huge product problem. So we need to develop better products fitting the market, better product market fit per se. And in order to do that, you need to get the underwriters on board and the insurers and the reinsurers, and they can only more efficiently underwrite if they have technology. So the software as a service, we are providing software solutions which are mainly targeting distribution and core system optimization to clients all over Africa. We just signed our first project was in Nigeria and Ghana, we are in Zimbabwe, we are in Kenya, Rwanda, Uganda. So we are having partners all over to help them optimize core system and distribution, which is going to help us to digitalize the whole ecosystem, not just us. And always say InsurTech is an enabler, right? That we are not a standalone solution, but also helps us in terms of product design for the client. And then we are obviously also using our partnerships, and I think Ruak was going to talk a little bit later when it comes to embedded solutions. So how can our APIs be used by strategic partners so that the clients can actually do a purchase in connection with a more day-to-day purchase. And we just launched earlier this week an amazing partnership with some SMEs. So we are bringing an SME policy. And this is, again, a good example for also product development, because we just launched an SME policy here for small brokers for $70, actually $63 per month, which we all understand is very much micro. You can only do micro when you're digital, and the distribution is cost efficient. That this is one of our embedded solutions, which we just joined actually on Wednesday this week with three strategic partners and an underwriter called Britain here in the market. So this much about MTech, but I thought this was important to understand. But I am really urging early InsurTech, we gotta get the industry digitalized, right? And I had an example the other day. Was one of my partners who's doing telematics, or even a little bit more crazy. There's a solution in South Africa where people just taking a picture from a car and automatically it's going to tell you how much the damage is. Yeah, but you can only use these absolutely amazing tech tools that are out there if the whole ecosystem is digital, and there's so much you can do. So let's take everybody with us, because if we are walking together, the walk is hopefully going to be a little bit easier. So why is it important what all of us are doing? Why is InsurTech important? Let's look at the market. The market is huge. I mean, not as huge as we are hoping it should be. And please, nobody hammer me on this number, $74.19 billion in Africa. This is a number I got from Swiss Re Institute. It is big. So when we are looking, and we're always talking to investors, what is the market size, etc. There is already an existing market, but I'm also loud and clearly telling everybody this market is to be disrupted. So how can we make these $74 billion more profitable using tech? But B also, and this is where we are going to the second part, the market has potential. We're having an insurance penetration of 3%. It's way below international average, but it is also way below other developing countries or other developing continents. So we can't say, okay, ventures now originating from Germany. Obviously, the market penetration in Germany is a little bit higher, but even when we are comparing us to other developing countries, it is too low, and we got to do something about it. So we're having already a big market. What can we do as InsurTechs, and how can we use technology to make this existing market more profitable, more efficient? The biggest classes in insurance are actually loss-making. Virginia Motor is the biggest class, completely loss-making. But then also, how can we increase this market? And you guys can all do your calculation. Even if you would get the market penetration 1% up or 0.5, and there's quite some money there to be earned. One thing I want to tell you, and then I'm going back to that slide, is why is this market now only at 3%? Yes, we are expecting a growth in the industry. Again, good for everybody who's sitting there and marine. We are all working in an industry where we are perceiving a lot of growth. And what are the barriers why our insurance penetration is lacking at around 3%? One is very clearly distribution. 85% of insurance premiums are sold in the capitals. This is a data point you will see all over the continent. 85%. When I'm putting this now into the Kenyan context, it is not that 85% of the GDP is being generated in Nairobi. So what does that tell us? That the counties are actually completely underserved. Can technology solve that 100%? We all know when you're having a technology product which is working, you can actually not only purchase your premium and understand it with the convenience of your phone, but you can also, even more important, manage it. But distribution is a major part of holding insurance penetration. And then also when you're talking about distribution, the embedded parts is in it, because actually embedded is one part of distribution. Then, and I mentioned that a little bit earlier, product. Every conference you will go to an InsurTech which is connected to Africa will talk about how are we gonna bring microinsurance products in then? So everybody says, we don't have the spending power of the big product, we need to go micro. Fair enough, makes economical sense. I'm fully with you, and I don't know who knows that data point. Actually, customer acquisition cost in Africa sits at around $470. So if my customer acquisition cost over the African continent sits at $470, how can I bring a microinsurance product? Like if I'm bringing now a medical product, like my cost-effective medical product monthly here at MTech is $3 roughly. How can I bring a $3 product if it's going to cost me $470 to get my client? I don't have to be an economist to understand that actually is going to become an issue at some stage. So we need to bring microinsurance products, yes, 100%, but we need to put the ecosystem in place to service this microinsurance product. Again, not only for purchase, but also for management of the policy. And then it makes sense when you're distributing it cost efficiently, but otherwise the product market fit is a major barrier to insurance penetration. The next thing is affordability. We are all having regulators in our countries. So comes also a little bit back to the microinsurance part, but affordability in terms of cash and carry has been voted number 3 of the insurance penetration barriers here in East Africa. What does that mean? The regulators are actually asking us to do cash and carry. So I have to pay my policy 100% to be covered from day one. That does go against cultural tendencies, so to say, where people are not used to save money. Definitely not for insurance. So tech now, when you're an underwriter, when you're an insurer, even when you're a manual broker, it is also hard to finance insurance policies because the administration cost behind it is going to eat your margins, right? Making the business unsustainable. But for the use of tech, and there is amazing payment integrators. When you're talking about fintech, where we are part of, actually, payments is actually the biggest part. You can actually, again, embed that. So what is happening on MTech, everybody can pay the policy on a monthly, daily, weekly basis, and we are doing the credit rating against the ID number. Again, enabled by tech, and has really ironed out one of the biggest barriers. And then the big person in the room is trust. If I would ask everybody in this room, and now unfortunately I cannot see the room, but if I would ask anybody in this room now to not to raise their hands, who's actually trusting their insurers or who's trusting their brokers or agents, I would probably not see too many hands. And I think sometimes the industry deserves that reputation. We have to steer against it. But one of the biggest things how you can generate trust is if you're putting the power of the process into the hands of the client, or into the hands of the users, and if you can also communicate with your user. right? There's a reputation in the industry that insurers are only getting back to you once you are talking, once you have your renewal coming. And it is true, data is telling us that. But again, with technology, there's constant communication with the client, whether it's push, whether it's emails, whether it's in-app, whether it's WhatsApps, etc. But then it's also really the part of I can handle my own destiny from the fingertip, from my device, from the convenience of my device. And I think that is a big issue. So when you're looking at the barriers, this is what's holding the industry back. But now, good news for all of us. African clients are looking for the InsurTechs, and it has been made. Congratulations. I think this is something we should celebrate. 52% of customers and 80% of millennials, which is the generation who is now going to have the spending powers, are open to buy insurance from an InsurTech. So let me tell you one thing. If there's somebody telling you people will not buy, and I was told this 2 years ago, Benzo, nobody will ever buy a medical insurance from a smartphone. Today, 45% of my business is medical insurance. I choose them all.
We're at a pivotal moment in the Nigerian insurance industry, and the role of innovation and collaboration cannot be denied. The 6-week NIA Innovation Lab is designed to connect innovators with insurers to solve real industry challenges. This year, we're zeroing in on 3 themes. 2 industry-wide challenges, electronic KYC, and a claims exchange starting with motor insurance. The third is a wildcard for fresh, disruptive, and interesting ideas. If you are an innovator with a valuable solution, this is your chance to collaborate with us, with the industry. Apply today at nigeriainsurers.org/innovation lab. Let's transform insurance in Nigeria together.
It's not like that. People handle their banking on their smartphones. People handle all kinds of things on their smartphones. People are also very, very happy to manage their insurance on a smartphone. So, tick, you have a market. Tick, the market is going to further grow. Tick, clients want you as a business case. Barriers are clear. So now, what do InsurTechs for me have to do? And InsurTechs, I'm actually celebrating all the InsurTechs which are in the market. I think if somebody would have told me a couple of years ago what I put myself into, I'm not sure with them what their journey, because it is, let me tell you, the journey is tough. And because we are trying to disrupt a legacy system, and we are trying to disrupt a system which partially doesn't even want to be disrupted because they're scared. They're scared for something new. They're scared for something they don't know. And I'm not saying you don't know what you don't know, but there is a sense of disruption. But be ready for a lot of traditional setback. You do not know how often I'm sitting in boardroom tables and people, CEOs would tell me, and we have always done it like that. Yes, but it's not working how you're doing it. Look at the numbers. Look where people are dropping off. Look at your renewal rate. Look where your clients are, etc. When we are looking at InsurTechs, I am a big supporter of we need, and I said this before, take the whole industry with us. So I'm urging every InsurTech, but whichever part you are touching, you need to see how does that integrate either with the existing ecosystem or also with other InsurTech players. And it is not that we are competing, guys. The market is big enough, and there is things which others are very good in, and then there's things you're going to be good in. But you need to get tech right for the pricing and the underwriting, because without that, you will not find a good product. And there's technology there. How can we collect data which is helping our underwriters to give us better products? Yeah? Because when they have data, when they have proof, they're very happy to relook at their products. So data for pricing and underwriting. And claims management. How can we make sure that our clients understand which documents, which information they have to submit, but also put again the insurers and make it easy for them. That information is all unified, available. When we have, this is really the first step. And when you get that right, then you're looking at what I mentioned before, pictures of cars which are automatically gonna calculate the damage, etc. But get your basics right. And it is not just the purchase. It is even more important, the claims and the editing of policies. And this is also tying in with operations. And I can tell you a story about me being an underwriter who makes one of the top 3 underwriters in Kenya. And they told me when they're getting a claim in, they would need to basically walk into the finance office, see if the policy was paid, when it was paid, how it was paid. Then it would go to legal to try to find any loopholes there, and then eventually it would go back. That whole process would take around 2 weeks, 3 weeks minimum. And honestly, tech can probably bring that down to 30 seconds by creating one source of truth. When it is distribution, I love agents, but I'm also not shy to say, and we need the agents, but I also think agents need to embrace technology to the interest of their clients. Brokers the same, and underwriters also. We need to get distribution outside the capitals. It's completely underserved, and we need to get the distribution right and get to the people where insurance really matters as a welfare planning product. And then in the lead generation, we just did a project here on the life insurance product. And maybe this is making people understand the power of tech. We are running at a conversion rate of roughly 19% on NTech, which is high or satisfactory for us. And we generated 9,000 leads for an underwriter, actually Sanlam, in October this year. There are manual processes with the whole network layout, meaning own sales channels, lead generation channels, agents and brokers generated 218. So I'm just gonna let it stand there. Tech, around 9,000, manual service, 218. The industry has to embrace tech, and the tech has to work. If your tech is not working, please make it work, because there's no second chance for a first opinion, I'm always saying. So in a summary again, we need data for pricing and underwriting. We need to digitalize the whole ecosystem in order for our own solutions to work. And we really need to be looking at the industry challenges, protect against it, and solve it one by one. I'm always saying Rome has not been built in one day. Also, the insurance sector will not be built in 2 days, let me put it like that. Now, how are we doing that? Where did I burn my fingers? I'm telling you upfront, we are not perfect. We're having a lot of challenges, and I mentioned before, but I would have known a couple of years ago what I'm putting myself into. I probably would have still done it, but I'm having a couple of more gray hairs more. So, enter for the glance. Through our efficient distribution channels, we have brought down our customer acquisition cost to $26.75. A user acquisition cost we have at $2.25. I said local average is around $470, international industry average, and the customer acquisition cost is $900. So we are running at 0.03% of the overall industry average, and this low customer acquisition cost is bringing us into the league of microfinancing, which is absolutely essential for the continent. We have really automated all systems. Like I said, our technology kind of touches like a crack all over. So where our underwriters were not digital, we actually not only build APIs for them, we also build management systems for them, which was very costly, but which allowed us to onboard on our marketplace, for example, our 38 underwriters, and really ensure if somebody buys a medical insurance at 1 o'clock in the morning. They're getting their medical policy at 1:02. But it is really, we are at a roughly 75% automation rate compared to an industry average of below 10. I'm a big fan of multi-policy platforms. Why? In order to drive penetration, in order to get people into the concept of insurance, into the concept of welfare, one policy maybe you're starting with, but there's other policies in it. And then, let's be honest, Mutual is a loss-making business for the underwriters. It's also not having the impact. So please, very early, think about the classes which are really going to have an impact and are really going to touch on the people. Because if you're trying to get an impact on mutual insurance, I mean, how many people are really driving a car? Yes, there is a lot of cars, but this is where the impact sits. Medical, with PA covers, and with life covers. Yeah, it's not going to sit with the top 10,000 and know it's more worth driving a car. And please, for the purpose of cross-selling, create multi-policy platforms. Then generate a network. And one thing I put down here is now our digitalized lead generation network. We have here in Kenya around 1,500 digital-enabled agents who are pushing our product. But it is also a network in terms of B2B2C, yeah? Who can help you drive your agenda? How can you cooperate in Nigeria with the junior? How can you cooperate with an auto check, for example, to push your solutions and reach more people? You never be afraid of partnerships. Partnerships will accelerate your growth and accelerate, even more important, your learning. Get people on board, excite them for the idea, and run together with them. Everybody has their strength, and you should work together. And insurance is part of financial inclusion. Yeah. So we gotta get this finance part very important, and the payment and how we will never get insurance out for free. But what we can do is be making it easier for users to obtain insurance products. So think very early, whatever product you're having, how can you make it as convenient for your user to get it? And then trust, make sure your solution is working. You're an InsurTech. Your tech has to work. Your business is your tech. And I'm saying this, there's no second chance for first impression. If your tech is not working, people are going to drop it. So test it, alpha, beta, gamma, delta. I don't know, there's all this fancy tech language, but test it. And then test it in the market. See if it really gives the impact you're looking for.